numbers. But sticking with the banking space, we also had Reserve Bank of India, which offered HDFC Bank relief on priority sector lending norms and has permitted the merged HDFC entity to hike stake in both HDFC Ergo as well as HDFC Life to over 50%. This is before the effective date of the merger. So we have Ritu Singh with all of the details on this one. Ritu.
Well, there's some regulatory relief and some disappointments, if you could call it that, with RBI granting certain exemptions to HDFC and HDFC Bank for their mega $40 billion merger. First, the relief. RBI has allowed the bank to meet priority sector requirements in a staggered fashion in the next 3-year time frame. PSL is essentially loans to weaker segments of the economy, and banks have to keep 40% of their loans for this. So the merged entity is going to have some time to rebalance its book. The second relief is in terms of HDFC Limited stake in the insurance subsidiaries, where RBI has said that HDFC Bank or HDFC Limited can increase its shareholding to more than 50% in both HDFC Life and HDFC Ergo before the effective date. Currently, HDFC holds about 48 to 49% stake in both, where it will now hike stake marginally. Now, as far as HDFC's stake in other subsidiaries is concerned, so HDFC Education and Development Services and HDFC Credila, that will have to be brought down to 10% in the next 2 years. Now, where RBI has not granted relief is in meeting LCR, CRR and SLR requirements, which I'll explain. So HDFC Bank had sought a phased approach to meet these reserve liquidity requirement ratios. For instance, banks have to invest 18% of their deposits in government bonds, which is your SLR or statutory liquidity ratio, and keep 4.5% of deposits as liquid cash, which is your CRR or cash reserve ratio. But RBI has granted no relief on this front, and on the effective date, the bank will have to comply with all of these. Our sources, however, indicate that the bank may be comfortable enough to be able to meet these requirements by the time of the merger. Besides this, RBI has permitted the merged entity to link HDFC loans to appropriate benchmarks in a 6-month time frame, but it has also asked them to ensure that income recognition asset classification norms are complied with as on the date of the effective merger.
All right, so that is on Reserve Bank and what they have to say on HDFC Bank before the merger. So, Ritu, thanks a lot for bringing us all of the details. But with that, we do need to get into a short break now. When we come back, we're going to shift focus from all of this equity market action and tell you what's going on in the world of commodities. You don't want to miss that. Stay tuned.